bonds and unlimited credit, financial sorcery, or just boring math? All right, let's say you walk into a bank and say, "Hey, give me $1 million." They laugh. You cry. End of story. But what if you walked into that same bank holding a big old shiny folder full of government bonds? Suddenly, they're offering you coffee, smiling too much, and asking if you want a loan. Why? Because bonds equals credit magic. Let's unpack this voodoo before you start printing your own fake ones and end up on a watch list. So what's a bond again? Just in case you skipped class, here's the lazy man's refresher. A bond is a glorified IOU. You give money to a government or company. They promise to pay it back later with a little thank you cash every few months called interest. It's like being the bank, but without a vault or the uncomfortable chairs. Okay, but how does that get me credit? Let's pretend for a second that you're a bank. Congrats, you're now both boring and terrifying. A random person walks in asking for a loan. You check their credit score, their job, their weird crypto investments. And it's all a mess. You say no. Now another person walks in. They've got $500,000 in US Treasury bonds. You go, well, look who's rich in paperwork. Why? Because bonds are assets. Assets can be used as collateral, and collateral makes lenders say yes faster than a raccoon goes for garbage. Collateral, the secret password to unlimited credit. When you have valuable stuff, like real estate, gold, or yes, bonds, you can use it as a guarantee. If you don't pay back your loan, they keep your stuff. So when you slap a bunch of treasury bonds on a banker's desk, they're like, "Oh, you're serious." And that's where the unlimited credit myth comes from. The more bonds you have, the more credit you can unlock, but it's not infinite. Unless you're the government, in which case, you literally print the credit. Why do banks love bonds so much? Low risk. Especially government bonds. Uncle Sam isn't likely to ghost you. Liquid, which is a fancy finance word for can turn into cash fast. Stable income. Bonds pay predictable interest, which is like candy to risk-averse lenders. Bonds are like the nerdy kid in school who always did their homework and never got in trouble. Boring? Yes. Dependable? Also yes. This sounds like free money. What's the catch? Oh, there's always a catch. This isn't financial Candyland. Credit still depends on you. The bonds help, but if your finances are trash, no one's handing you a black card. Leverage is a double-edged sword. Using bonds to get more credit is called leveraging. If you overdo it and stuff goes south, you could lose your bonds and owe money. Interest rates can mess you up. If rates change, the value of your bonds can drop. Suddenly your sweet, stable assets look less sexy. So yeah, you're not exactly invincible. Real talk, who's actually doing this? Big players, banks, corporations, billionaires who buy treasury bonds like you buy gum. They hold bonds as assets, then borrow against them to do more investing. It's like a credit loop powered by debt. That's called monetizing debt. And it's capitalism's favorite party trick. Some business folks even use private placement bonds, which are basically sneaky little IOUs they create themselves, backed by their own trusts or weird legal structures. And yep, they use those to get more credit. It's legal, it's boring, it works. So, can I just buy a bond and get a loan? Technically, yes. Realistically, calm down. A single $1,000 bond isn't getting you a yacht loan. But a solid portfolio of bonds can improve your credit profile. And it's one of the most respected ways to say, "Hey lender, I'm not broke." Also, some people park bonds in a trust, then use that trust as an anchor for building credit, applying for business accounts, even tax strategy. We're talking IRS-certified clean moves here, not TikTok hacks. Why this works: perception and paperwork. At the end of the day, lenders love one thing more than money: predictability. Bonds scream predictability. They say, this person isn't betting on Dogecoin. This person likes sleep and taxes. If your name is on a brokerage statement that says you hold $100,000 in long-term government bonds, it's like showing a bank you wear financial deodorant. unlimited credit is a stretch, but not a lie. If you own enough bonds and you know how to use them correctly, you can secure bigger lines of credit. You can qualify for business loans. You can even create entities like LLCs and trusts and use the bonds inside those to apply for more stuff. Is it truly unlimited? Number. But it feels like it when doors keep opening. The credit game. You're now invited to most people think credit is about begging banks or using credit cards, right? That's the bottom shelf stuff. The upper level game, that's assets as collateral, trusts as financial shields, bonds as leverage.